Okay, hi, my name is Lynn O'Shaughnessy of thecollegesolution.com, and today I'm here with Paula Bishop. She's a nationally known expert on financial aid. She's a CPA from Bellevue, Washington. Her website is paulabishop.com. And I'm asking Paula today a question that a lot of families, a lot of parents are stressed about, and that is, will my home equity hurt my chances for financial aid? You know, a lot of parents wonder about that. Oftentimes this is not an issue, but Paula's going to tell us, Paula, could you tell us when it does matter and when it doesn't matter?
Okay, as you might know, there are two main financial aid forms. One is the FAFSA form that everyone has to fill out because it gives away government money first for the college. And then there's the CSS profile, which is used by about 260 colleges that asks a lot more questions. And one of the main questions the profile asks is, how much equity do you have in your home? The FAFSA form totally ignores it. It's not even a question because the government decided you shouldn't have to mortgage your house for school. A profile is looking at it like, oh, wow, there's a big asset here, and we might want to tap it to reduce the amount of financial aid we need to give you, but also that maybe you can take a home equity line out against your home or something like that because it is an asset. But the secret part on the profile school side is that there's a wide variety of how they use it. Some schools don't use it at all because they have so much money. That's like the Harvard, Princeton, those types of schools.
And there's like other schools, a few, like Whitman College in Washington, they don't use.
But they tell me that, oh, we don't use it this year, so don't.
Well, that's another thing, right?
Yeah, don't be hesitant to call a school and ask, how are you using it? Because every year, if they need more money or give out less money, they might change how they use equity in the home. Another option for a college is to put a cap on the dollar value of the value of your equity to a multiple of your earnings. So if you're earning $100,000, they might cap it at 2 times. So they look at equity as $200,000 rather than if you have $600,000. And the equity is the value of the home minus the mortgage. So even that value, you should look for whatever low number for your value, current market value that you can find.
Well, that's something that people ask me about. They're like, well, how do I find what my house is valued at? What do I use? Can you give them suggestions?
Well, usually property tax statements are a lower number than the real value, so I would look at that. Then I would compare
the assessed value or
the assessed value, yeah. And then I would see if there's a comp in my neighborhood that has a lower value than that. I would use that because they really don't have the time to question you on this. And then I'd also look at Zillow to see what they say. But if they ever ask you, and that might be 0.01% of the time, you have an answer. I used Zillow. I used a comp in the neighborhood. So you have a valid reason. Then they can argue with you because they ask you. Well, they know where you live, but they say, what's the value? When did you buy it? How much did you buy it for? And all of that. So they have some data, but at least I very, very rarely see them question what number that you have.
Now, I did want to ask you about using assessed value because I live in California. So because of Prop 13 decades ago, a lot of the assessed value is far lower than what it's actually worth.
Then you're lucky.
Oh, okay.
I would use that because if just act stupid, because
good to know.
The difference between equity in your mortgage, the value in the mortgage is they combine it with your dollars in the bank, so they look like you have $200,000 and really it's tied up in your house.
Right.
So don't be afraid to call a college. How did they use it for your particular situation? So if you get an aid award and you don't like it and it's so much different from what you expected, ask them that question because they'll say, oh, we use full equity. And there are many colleges like Boston College, I think American University, that use 100% of equity.
A lot of schools, do.
Quite a few, right? And so it's a gem when they don't use it.
Right.
So,
or when they just link it to, 1 or 2 times your earnings, and that's better. That's good.
Right.
It's better than full. Goodness.
A common one is 1.2 times your earnings. So that's all the selective colleges in general use that because they don't want an award from one high-end school to be so different from an award from another school. And that's usually what the bottom line is. If I see if a child got admitted to 2 schools of same selectivity, it's usually the home equity.
Right.
So you can appeal that and have them match another award if you can. So home equity is a hidden gun, really, that can hurt your chances. So the main aim is to try to find the lowest market value you can for the home. Sometimes I say, what can I sell it for in 30 days in a distressed sale minus the selling costs?
So you could subtract selling costs.
There's no rule.
Okay,
It's supposed to
there's
be
no
the market
rule.
value,
Okay.
but to get any equity, no bank is going to lend you
That's
100% of your
That's
equity,
true.
so you want to discount it a little, or if you know that it has earthquake damage or something, you could even discount it
Right.
more, so comp doesn't even work. But you have to have some plausible reason if they ever ask,
Okay.
and they, I very rarely see them ask. So.
Right, that's interesting. And I think what I found interesting, Paula had spent time contacting like 150 of these profile schools, a lot of elite prestigious schools, to ask about their policies. And what was interesting for the schools that Paula contacted that said, well, we use full equity, they usually would say, well, we will, people can appeal that.
Mm-hmm.
But the thing is, people wouldn't even know that to appeal it, because they just see this award and they have no idea why it's lower than they might have thought. They don't know it's their home equity. So that's something that you should look into it. Another way that you can find out how much home equity will impact an award from a profile school is use the school's net price calculator.
Yes.
And put your home equity in and run the calculator to see what your net price is, and then pull your home equity out, and put it back in, and then see how it goes up, or if it goes up that much, then you'll have a sense if they are using home equity, and how hard they are penalizing you for that. And you can find net price calculators. Just Google the name of the school and net price calculators, and I've written a lot about that. You can just Google my name and find out more about net price calculators. But clearly, this is an issue, and I think we need to emphasize, though, that the vast majority of schools in this country just use the FAFSA, and they don't care about your home equity. They don't even ask if you own a primary home. So this is really just about those 260 or so schools, almost all private, that do inquire about home equity. Do you have anything else to add, Paula?
I'm just amazed in my study about the range from not using it to 100% to 2 times your earnings, 3 times your earnings, and it pretty much maxes out as 3 times your earnings if they're going to cap it. And then the next jump is full equity. So be aware.
Okay.
Thanks,
everybody. Bye.